For more, let's bring in Craig Moffett. He is partner and senior analyst at MoffettNathanson's. Craig, a lot of this, the reports that you've done, excellent work on Apple, came out before today. Is there anything so far that you have seen or heard from the conference that would change your thinking on the stock?
No. Hey, Brian, how are you? No, not really. Look, what's the old joke? They set expectations really low and then they proceeded to meet them. They did pretty much what everybody expected. I think Steve did a really good job of recapping what they've said. There's nothing here that's going to change any number in anyone's model. And the real question is where's the growth going to come from? And that's still a huge question mark.
Where do you think it's going to come from then? If what we're seeing, the neat, listen, some cool new features. Absolutely be able to pin music. As a music guy, I love that feature. It's probably not enough for me to want to buy a new phone that could run the iOS that could do it. So it sounds like, Craig, you're not seeing or hearing anything that would drive somebody to say, you know what, my phone works, but I want to pay $1,000 because I need the new phone because it does X, Y, or Z.
That's exactly right? Step back a little bit, and there are two fundamental questions that underpin the bull case for Apple. One is this question or this belief, really, that we are on the cusp of a big upgrade cycle for iPhones, which are, after all, by far Apple's most important product. The reason people were excited when we came out of last year's WWDC was that it looked like we were on the brink of an Apple intelligence revolution that was going to require a better device. It was going to require 8 gigabytes of memory, and it was going to require a neural processor, and you were going to have to, therefore, get a better device in order to take advantage. That hasn't materialized over the past year, and it's not just that it's getting pushed out. It's starting to be a real question about whether, when Apple Intelligence comes, it will really be sufficiently device-based as opposed to cloud-based, that it's going to require an upgrade cycle.
Craig, go ahead.
Sorry. I was going to say the second big belief is that maybe alternatively, agentic AI is simply a subscription, and there's another $20 a month in Apple services. That's also becoming harder to envision, in part because Apple's competitors are moving really quickly and defining alternative business models, including advertising-based business models, and it's getting harder to see either the upgrade cycle or that big subscription bump to services that you kind of need to have to justify a valuation that's still flirting with 30 times earnings for a very low single-digit growth company.
And to that point, I was just going to say you have the lowest price target on the street. I mean, you think it's worth 141 a share. It's at 200. I think back to when Buffett started buying, it was, 10 years ago, maybe not even. Apple had gotten down to quite a low multiple, a lot of concerns back then. I forget exactly what it was around. At what point is this an opportunity for long-term investors to get in and go, you know what, in the long run, they're going to figure this out, but these kinds of buying opportunities don't come around a lot. I guess to your point, 30 times earnings is not usually a bargain basement opportunity or moment to get in.
That's right, Kelly. We're not, it's not like we're suggesting there's this calamity coming and therefore people are going to switch from the Apple universe to the Android universe. I don't think anybody believes that's going to happen. No one is suggesting that Apple is going to start to lose its customers. But you have all of these pressures, this sort of death by 1,000 cuts type of pressures on, for example, the growth rate that Apple is getting from services that is now under pressure because of the ruling in the Epic case, where companies can now go outside of the Apple ecosystem, or alternatively, the threats to Apple services from the Google case and the what are called TAC revenues or traffic acquisition cost revenues that they get paid by Google, or the challenges that they face in China simply because the alternative devices and this desire for nationalist champions in China are crowding out Apple's market share. Mm-hmm. All of those pressures say the numbers are likely to come down, and the multiple still hasn't come down. And so no one, I certainly wouldn't suggest that, Apple is on the brink of losing its customers. Nothing like that.
Right.
It's simply that if you start to see even a little bit of pressure on particularly services revenue, but just revenue in general, and the growth rate comes down and you have negative revisions, the multiple is going to come in too. And all our 141 target price was saying is that you put a slightly more sober multiple on this thing, and you start to reflect the cuts that, remember, we haven't even seen estimate cuts in response to tariffs yet. That if you start to see estimate cuts and a trimming of the multiple a bit, you're talking about a stock that trades at a more pedestrian valuation, and 141 is not some kind of bargain basement price for Apple. It sort of reflects kind of what Apple is, which is it is a really well-run but slow growth staple rather than tech growth company at this point.
Well, at least